If the gold price increases meaningfully, this will be a must-own gold deposit. The major mining companies around the world struggle to and do not succeed in replacing their reserves. They must be aware of the fact that they are madly producing gold when the circumstances in place to let the gold price go higher. From the majors' point of view, it would be a pity if the gold price went higher and they had a hole in the ground where their gold used to be. If we do see $2,500 gold, or if we do see $3,000 gold, what Rudi has been trying to do will become enormously successful.
RickRule, an accomplished entrepreneur, is renowned as the founder and CEO of Rule Investment Media. RickRule predicts that higher gold price is necessary for Rudi, Fronk, CEO of Seabridge Gold Strategy, to be unfold, and envisions major success if gold hits up to $3,000. On August 18th, Seabridge Gold Investor posted on Twitter that in our view, gold will emerge as the asset class with the most potential this decade, no matter the financial or geopolitical backdrop. Under the most extreme scenarios, a repeat of the deflationary implosion that produced the Great Depression or a period of inflation that verges on hyperinflation, gold will be the winning asset class. Rick also mentions silver's historical pattern of lagging behind in precious metals bull markets and eventually outpacing gold once momentum builds. The gold-silver ratio has fallen below the 80 level, suggesting that silver will outperform gold prices going ahead. Two reasons are stimulus measures in China and robust industrial demand as the U.S. looks to spend $45 million to develop domestic manufacturing with the solar power sector. However, Rick states that primary silver producer scarcity and leverage during silver market shifts occurring around once a decade. This, along with silver's unique behavior, offers an attractive opportunity for investors. Silver Bull's next upside price objective is closing prices above solid technical resistance at the July high of $25.82. Meanwhile, Rick shares that Rudi, Fronk and his team foresaw potential dollar devaluation and amassed gold. According to an International Monetary Fund in a blog, some analysts said that this partly reflects the declining role of the US dollar in the global economy in the face of competition from other currencies used by central banks for international transactions. World Gold Council (WGC) data shows that central banks returned to buying gold in June, increasing their inventories by 55 metric tons after a 3-month sales. Now we are presenting you the glimpse of RickRule insights from his recent interview with Rule Investment Media. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
Silver, as you and I have remarked, Albert, most recently at the Silver Boot Camp, tends to move later in a precious metals bull market. But once it moves, once the momentum has been established by gold, silver tends to move much further and much faster than gold does. And as our mutual friend Doug Casey points out, the most volatile asset class in resources to the upside are the silver equities, simply because they're so rare. Most silver in the world, of course, is not produced from silver mines. It's produced as an adjunct, as a byproduct from lead zinc mines, from gold mines, from copper mines. Silver producers, people who produce from primary silver, are therefore more leveraged and very, very much more scarce. As Doug Casey teaches, when the narrative switches to silver, which happens about once a decade, and the generalist money comes into the silver patch, there isn't enough market cap to contain the money. The upside that you see in the silver equities, particularly the better small silver equities, could be very dramatic. And I think that our audience base, some of them have experienced as many cycles as I, which is to say they go back in the business to the 1970s. And they understand that while silver bull markets are very rare, they are also very special. I think the specter of silver and its upside being out of favor, meaning that the equities are relatively dormant and relatively cheap, and a new silver discovery and a relatively small market capitalization has met a sort of an irresistible combination for our speculator audience. Rudi's a very focused businessman. You will note in tomorrow's discussion that he's worked 25 years, 2.5 decades, to become an overnight success. He and his backers came to believe a very long time ago that ultimately our collective financial sins would likely lead to a deterioration in purchasing power of the dollar and a revaluation, at least in nominal terms, of gold upwards. And they sought to get control of as much gold as they possibly could for as little money as they possibly could. And as a consequence of that, have beavered away for 25 years to put together the Kerr Sulphurets project, which in terms of reserves and resources is in excess of 100 million ounces of gold. The investment theme here is, as you suggest, very simple. At current gold prices, that deposit may not have very much value because it's low grade and an awful lot of capital is required to put it in production. Rudi very correctly says that his company has neither the financing nor the expertise, frankly, to build a $7 billion gold mine. Their job is to de-risk the project as much as they can and hold on to as much of it as they can, and then either sell the company or, preferably from their point of view, sell an interest in the deposit to a major mining company that has the technical expertise and the financial wherewithal to make the trade. And a higher gold price is what's required to enable them to do that. As you suggest, this is a very, very, very simple project.
RickRule underscores the challenge of building a reliable gold-backed settlement system. However, he anticipates the Brics mechanism to stay a settlement tool for gold's demand and price landscape. Barron says the recent Brics summit in Johannesburg, South Africa, included an agreement on a first step toward establishing an alternative international trade settlement system based on commodities, which would certainly include gold. He points out that the debasement of the fiat dollar has lowered its purchasing power to gold by 98% since 1971. Sanctions against Russia, including freezing assets and swift exclusion, have expedited the move to an alternative system. Let's get back to interview.
I think another theme that people need to pay attention to is all of the discussion about the Brics currency. Yesterday, it was announced that 4 or 5 more countries have joined in the Brics, and there's a lot of alarmist stuff about the fact that the Brics control 80% of the world's oil. They did the day before yesterday, too. So the announcement yesterday doesn't change very much. I think you look at the Brics for what it is, which is to say a settlement mechanism between parties who don't trust each other, not a common currency. The idea that the Russians and the Chinese and the Iranians and the Argentinians and the Brazilians and the South Africans and the Saudis and the UAE would subsume their domestic fiscal regimes and their currency to a common currency is silly. I also don't think that there is enough gold on the planet to back a currency that had that many transactions taking place in it. What you are seeing is the emergence of an alternative settlement mechanism. These countries have looked at the perniciousness of the United States. They have looked at the monetization of the settlements business, including SWIFT, and they have looked too at the debasement of US dollar denominated savings products like the 10-year Treasury and the 30-year Treasury. And they've said to each other, we have no second choice but to establish a settlement mechanism that is less dependent on the US dollar. Because they don't trust each other, because the Chinese don't necessarily want rupiah or rubles, and they certainly don't want Argentine pesos, the settlement mechanism that they are effecting is gold. Now, talking about it and doing it will be very interesting. In order for this to be a true settlement mechanism, the gold will have to reside somewhere. Imagine, as an example, that Russia ran a $2 billion trade deficit with China. And imagine Mr. Xi showing up with a bunch of Brics and presenting them for settlement with Mr. Putin. And Mr. Putin saying, well, no, those are debits, but I'm not actually going to give you my gold. What that means is that these countries will have to, in order for the settlement mechanism to be reliable and trustworthy, give up control of their gold. The gold will have to be on deposit somewhere where it can be wheeled from the Chinese vault to the Russian vault, from the Argentine vault to the Saudi vault. And Albert, I can tell you, going back to the early part of the last decade, when I was marketing Sprott investment products to the biggest sovereign wealth funds in the world, that as little as those countries trusted the United States for deserved reasons, they trusted each other less. I'm reminded of a wonderful quote by our friend Doug Casey, who said the US dollar is an IOU nothing. The euro is a who owes you nothing. And the Brics will likely become a nobody owes you anything. At best, it's going to be a settlement mechanism. And I think people need to understand that. There are people on the gold side who suggest that having a, quote, currency backed in gold will lead to amazing demand for gold. When they hear my objection that there isn't enough gold in the world to back up their transactions, their response very quickly and with delight is, not at this price, at a higher price. I suspect that those gold bugs who are looking at the Brics and the Brics settlement system to prop up the price of gold need to look elsewhere.
Gold and silver markets are poised for transformative changes driven by historical trends and global shifts. The emergence of a commodity-based settlement system through the Brics initiative adds complexity to the landscape. As investors, how do you position your portfolios for potential opportunities? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.